I'm Nicholas Bornolis of Capital Link. I'd like to thank you all for being with us today. To the Capital Link New York Maritime Forum, I'd like to thank all the sponsors, the participants, the speakers, and of course the Capital Link team, and in particular DNB for being our partner and for sharing the heavy lift with us. I think this forum is taking place at an amazingly interesting time. The panels in the morning were quite spirited, insightful, spot on timing. So thank you to all for being here. Now, if you allow me, before starting the luncheon, I would kindly ask you if we can all stand up and keep one moment silence in the memory of Jim Lawrence. Jim, you all know, has been a pioneer and amazing contributor to the industry, and we all honor his memory. So if we can keep 1 minute silence. Thank you very much to everybody. And if you don't mind, we will start with our introduction and presentation, and then we'll proceed with lunch. I'd like to thank the New York Stock Exchange for their long-standing partnership and support. I'd like to invite Chris Taylor to come and take the floor. Chris, thank you again for all your help and support over the years and for your contribution. And also Stefan Jekyll is here with us. I don't know, Stefan, where you are. There you are. Thank you.
Thank you, Nicholas. Hi, everyone. For those of you that I don't know, I'm Chris Taylor, Chief Development Officer and Global Head of Listings at the New York Stock Exchange. First off, Nicholas, congratulations to you and your team. I always marvel at what you put together every year, if not more, in New York. And I know you're headed to Shanghai next week. You're a bundle of energy, and congratulations as always. To all of the companies and investors here, it's great for us to be involved. I want to particularly welcome our New York Stock Exchange Maritime companies. We have close to 30 companies in this industry that are listed on the New York Stock Exchange, valued at close to $50 billion and more than a half about $500 million of liquidity every single day. So it's a very, very important sector for us as well. Nicholas mentioned my colleague, Stefan Jekyll. He's head of international listings. I know he's a familiar face to many of you. Now, I get the treat to introduce another NYSE listed companies. You know, the New York Stock Exchange has about 2,300 companies from 48 countries around the world. They are the lifeblood of what makes the New York Stock Exchange tick. I'll be introducing the co-CEO and director of a company called Enterprise Products Partners, one of the largest listed partnerships in the United States. They are a leading provider of midstream energy services to producers and consumers of natural gas, NGLs, crude oil, refined products, and petrochemicals. To think about the infrastructure they have and how important it is to the United States and really globally, more than 20 deep water docks, 50,000 miles of pipeline as well. This is really the backbone of energy in the United States, but it's felt all around the world. So I'd like to introduce someone who has been listed on the New York Stock Exchange for 27 years. We rang the bell back in 2018 to celebrate 20 years of EPD on the NYSE. Hopefully we'll be able to do this in 3 years to celebrate 30 years of EPD on the New York Stock Exchange. So without further ado, I'd like to call up the director and co-CEO of Enterprise Products Partners, Mr. Randy Fowler. Randy.
Well, Chris, thank you for that introduction, and Nicholas and Randy, thank you so much for the invitation to speak to this group today. Good to be with you. Chris did a great job of introducing Enterprise. We started off as a private company in 1968 with a total investment of $10,000 and 2 trucks and 2 customers. We remained private for about 30 years. In 1998, we went public on the New York Stock Exchange. And at that point in time, the enterprise value was about $1.2 billion. Today, the enterprise value, depending on the day, is a little over $100 billion. And as Chris said, we built quite a bit of infrastructure over the last 27 years of being a publicly traded company. And one of the badges of honor that we're quite proud of is we've increased our cash distributions to our partners every year for the 27 years that we've been public. So Chris really laid out, as far as the breadth of our infrastructure, and I think we really have a unique presence in the industry because we see not only what is happening at the producer level and the composition of the energy and the energy products that are being produced, but we also need to come in and think about how does that match up with the end-use consumers. And those end-use consumers can be the petrochemical industry, the refining industry, it can be utilities that generate electricity, and then also the international markets as well. So with that, we really have some pretty unique insights. When you come in and look at our presence from a export perspective, we export across our marine terminals anywhere between 65 and 75 million barrels of hydrocarbons each month. And that's really crude oil, it's refined products, it's natural gas liquids, and petrochemical products as well. So we have pretty good visibility into what's going on in the international markets as well. When you come in, and I guess one of the things I'd like to highlight is the role of U.S. energy exports in making the world a better place and improving lives across the world. And one thing I will note, the presentation is available on our website, enterpriseproducts.com, under the investor relations section, if you'd like to take a look at that. But when you come in and you look at the role of U.S. energy exports, I've sort of brought up a slide that we made out from Vaclav Smil, Dr. Smil, on how the world really works. And when you come in and look at the pillars of modern civilization, whether it's ammonia, steel, cement, plastics, and petrochemicals, they all depend on crude oil, natural gas, and natural gas liquids to really make things happen and to make a world a better place. And with that, to talk about how it improves lives, this is something that the UN created here a few years ago called their Human Development Index, and it's a way that they come in and really quantify how segments of the global population go from a low poverty environment up to a better economic place. And it really depends on really three aspects: life expectancy, education, and national income. So when you come back in and you look over the last few years, if you go back to 1990 when they first started doing this work, there was 5.3 billion people in the world. 62% of that population, or almost 3.3 billion people, was in the lowest economic strata. If you come in and fast forward to 2021, the population increased by 50% to 7.9 billion, but that percent of the population that was in that lowest, that impoverished part of the index was only 15% of 1.2 billion people. So again, at a time that we came in and saw population growth of 50%, we really saw poverty levels come in and decline tremendously over that time period. And really when we come in and look at really drill down of two of the areas that really probably accounted for most of that change was in China and India. In this chart, the x-axis shows energy consumption per capita, and then the y-axis is the improvement in the quality of life, if you would. And I think the one thing to know there is both in India and China, energy consumption went up quite a bit. And if you would, the life expectancy in both those countries, India life expectancy increased by 9 years over that time period, China by over 10 years, and we saw big increases both in education and income as well. So again, the energy consumption really helped improve the lives in those countries, and we're seeing it elsewhere in the world as well. So when we come in and look at global population growth, And this data is provided by Oxford University. I think it's called The World in Numbers. And it comes in, and we've overlaid the population growth with the blue line. That population growth today is up to 8.2 billion people. The UN forecasts it going up to 10.3 billion people by 2080, so the rate of growth is slowing. But still looking for that population to continue to go up. But you see one of the things that happens here, this is the sources of energy that's being consumed by the world to help support that population. So if you would, that bottom layer is wood or biomass. The black, appropriately, is coal. The gray is crude oil, the blue is natural gas. And you see as population grows, we continue to use more and more of those energy products. So a few years ago, when we were really talking about energy transition, we never did believe in that nomenclature because it's going to take all the above, and we still think it will. So we think you'll come in and continue to see it's more about energy addition than energy transition. One place that we highlight on how energy products help lift people out of poverty, there's something called clean cooking, and we talk about energy poverty. And even in this world today of 8.2 billion people, still about a third of the world, of 2.3 billion people, do not have access to clean cooking. And by clean cooking, we're talking about they're cooking on wood, coal, things of that nature. And so if you would, that causes a lot of in-home pollution. So maybe 4 million deaths a year are accounted for in in-home pollution. And one of the places it really makes a big difference is, we call it LPG, but think of it as propane and butane, two of the more prevalent natural gas liquids. And when you think about those two products, they're very energy dense, but also they're very portable. So, a lot of us have it in our grills, our propane grills that we cook on, but it's easy to distribute this out to the populace. And this has made a big change. So I want to say since 2010, 700 million people have been lifted out of energy poverty. 500 million of that has come from propane and butane. And what we see is we still see a lot of opportunities, especially in India and especially in sub-Saharan Africa. And that sub-Saharan Africa is really what's going to account for the lot of population growth, if you would, over the coming decades. And those are the areas that still really need access to that clean cooking. And when you come in and you look at LPG export growth, really the United States has really accounted for most of that. Today, the U.S. accounts for 47% of propane and butane exports in the world. What's notable, and the difference that the shale plays have made domestically, as recent as 2008, the U.S. was a net importer of propane, not an exporter. So this is really what we've seen by the benefit of the shale plays and where we've been able to make a difference, the U.S., with energy export and improving lives in the world. I'm going to skip over that one and really get to some of the production trends that we're seeing. And again, we'll give you some production forecasts here momentarily. But we're really seeing, we'll come in, and one of the advantages that we have of our position as a midstream player, we talk a lot to our producers because they want to make sure that we have energy infrastructure in place to handle their crude oil production and their natural gas production. So we spend a lot of time with the E&P producers, especially in the Permian Basin, but also in the Haynesville, the Eagle Ford, and in the Marcellus and Utica as well. And so we still see, and I guess we heard this on some of the first quarter and second quarter earnings calls, that with lower energy prices, producers are looking to come in and moderate their investment. And in fact, many of them came in and I would say probably lowered their capital budget for 2025 by 5 to 10%. But the one thing that they did during this period, while they lowered their capital budget, they did not lower their production growth forecast, which is still expected to be in single digits. And a lot of that is really, I think, coming around because of the mergers that are happening. If you would, some of these mergers are putting together contiguous acreage. So then for instance, in the Permian, when producers get ready to drill, because now they have contiguous acreage, now they can come in and instead of doing 3-mile or 4-mile laterals, they can come in and do 8-mile laterals. So again, they're able to come back in, and if you would, when you think of a well bore, they can get more facing in that reservoir by being able to come out and go out farther. So again, they're becoming more efficient with their capital and their production dollars, and still being able to make the production growth. Some of what we've heard from the producers, you know, if we stay in a high $50 crude oil world, $60 crude oil world, I think they'll pretty much they'll continue to see modest production growth. If we dip down into the low 50s, high 40s, you're probably going to see them go into a more maintenance mode when it comes to production. And then if it comes in and gets into the low 40s or lower, then you're probably going to see some rationalization, and you may see production turnover. On the global demand front, you know, and our numbers don't differ really that much from any of the other large energy houses that research, but we're probably seeing liquid hydrocarbon growth. So again, crude oil, condensate, and natural gas liquids continue to grow about 1 million barrels a day internationally. Natural gas demand, you know, we are seeing opportunities domestically in the U.S. for more demand coming from the AI and the data centers. Most of that is happening in Virginia, but because of the access to the production and the availability to build infrastructure, we're seeing more development in Texas and in Louisiana as well. Coming in and taking a look at some of the forecast, you know, when you come in, and this is U.S. production forecast, in crude oil, the U.S. just hit a record in July of 13.6 million barrels a day. With our forecast, we see that growing to about 14.5 barrels a day by 2030. So again, we've sort of gone from the mode of where we were growing, call it 10 to 15% a year, to now growing more 2 to 3% a year from crude oil standpoint. And then here's some of the forecasts that we have with for natural gas liquids and dry natural gas. And given that Permian is driving 60% of this growth, and I tell you what, before I flip to that, the one thing I'd also note on the dry natural gas piece, we only have Appalachia down for accounting for 3.6 BCF a day of that. Probably Appalachia has the ability to produce an incremental 25 billion cubic feet a day of natural gas, but I think one of the places where it really sees headwinds or friction to be able to attain that kind of potential is the regulatory and the inability to get new pipelines permitted out of the region. Here's taking a look at our Permian forecast, and again, we'll that's sort of the growth trajectory that we have on that. If we come in and really just drill down on the tabular standpoint, again, we see crude oil growing in the Permian. Make sure I've got the right chart. We see Permian crude oil growing by about 1.4 million barrels a day, notably because we're seeing the ratio of natural gas and NGL production to crude oil production growing up or going up as producers are drilling new areas of the Permian, or as the Permian ages. As it ages, you're producing more natural gas in respect to crude oil. So we're seeing natural gas production grow up by 8.3 billion cubic feet a day over that time period from 2024 to 2030, and then natural gas liquids growing at about 1.1 million barrels a day over that time period. You know, we came in, and again, with all the talk about a flat oil scenario, if crude oil prices do not support continued growth, what would a flat oil look like if crude oil production out of the Permian did not grow from 2025 to 2027? Again, because of that increasing natural gas NGL ratio to crude oil growth, during that time period, you would still see an incremental 275,000 barrels a day of NGL production growth and 1.5 billion cubic feet a day of natural gas growth, even in a flat environment. So this is what we see as what the export potential is out of the U.S. We've been exporting the surpluses for quite a while. I want to say if you go back to 2015, we were running as a country about a $90 billion trade deficit in terms of energy. Today, we're running an $85 billion surplus in terms of energy exports. And I think you've heard, whether it's Treasury Secretary Bessent, whether it's the Trade Ambassador or Jameson Greer, you've heard that one of the elements that the Trump administration is trying to do to come in and reduce the international trade deficit that the U.S. has is for our trading partners to buy more energy products. And that's pretty much what you're seeing here with this growth. Today, the U.S. is probably exporting 30% of our total energy production. If you come in and you focus just on crude oil, we're exporting about 55% of our crude oil production, and we're exporting about 20% of our natural gas production. So again, we're seeing it from that side. Here, this is ethane is a product that's not well known. It's probably the most prevalent of the natural gas liquids. And when you think of ethane and really when we think of energy, the Permian does not produce a barrel of crude oil. It produces a barrel of energy. So for every 3 barrels of crude oil that's produced in the Permian, 1 barrel of ethane is produced. For every 3 barrels of crude that's produced, 0.8 barrels of propane are produced. And as you saw in the previous slide, we are producing more of those products in this country than what we consume. And so as a result, you're seeing more of the ethane and propane. Every incremental barrel is really going to the export market. And the notable thing on this slide, I'll go back in my memory banks to 2003, which was a very harsh year for the U.S. petrochemical industry. And I remember a Bear Stearns research report, and it was on the petrochemical sector, and it was the Grim Reaper. And that's because at that point in time, the U.S. petrochemical industry had the highest feedstock cost or highest raw material cost in the world, and Europe and Asia was going to take over. And the benefit that's been provided by the shale plays is not only did the U.S. petrochemical industry survive, it thrived. So I want to say ethylene production, which is really used in consumable plastics, it went from about 55 billion pounds per year of production capacity in the U.S. to now it's 100 billion pounds. And with that, we still have capacity to export ethane. So not only are we exporting ethane, I will also highlight ethylene. So again, the product that comes out of making ethane, cracking ethane, and then you have ethylene derivatives. And I noted before, we're exporting 55% of our crude oil production, 20% of our natural gas production. When you come in at the petrochemical industry, when you look at ethylene and the ethylene derivative products, we're exporting about 40% of our production out of the United States as well. So we're seeing that on that front too, and again, that helps that trade surplus. And then finally, I will come in and finish on one of our facilities. This is on the Houston Ship Channel, and to a degree, this is one of our Swiss Army knife facilities, because not only is it one of the largest ethane export facilities in the world, it's also the largest ethylene export facility in the world, and Navigator is our 50-50 joint venture partner in that ethylene export facility. So again, I think when we come in and look, we still see U.S. exports coming in and supplying a lot of the world. I think the trade policies, I think, will continue to come in and support U.S. energy exports, and hopefully that comes in and reduces our continues to reduce our deficit, and for enterprise, maybe that means we're 28 consecutive years of increasing our cash distributions to our investors. So with that, thank you so much for your attention today. And Nicholas, I don't know if you wanted to open for questions or not. Yeah, be glad to take any questions if we have a few minutes here. I think we do, and I'll really bifurcate this in terms of crude oil and the natural gas liquids. LNG, sort of, that's not our world. But when you come in and you look at crude oil, that was telling me my 20 minutes was up. I was trying to stay on time, Nicholas. But the industry has a lot of capacity for crude oil exports, mostly on the U.S. Gulf Coast. And also the industry is adding a lot of capacity to export ethane and propane. And again, if you want to produce the crude oil, you need to export the ethane and the propane. And we're also coming in, and really we've just gone through a number of expansions on our ethylene facility, as well as our ethane and propane facilities of coming in and increasing capacity. In fact, I think just us, we think we have the potential to come in and increase our, currently we're 65 to 75 million barrels a month. We think we could get up to 100 million barrels a month by the end of the decade. It's really, we're seeing it in Asia, Pacific Rim, China, India. We're also seeing it in Europe. And we think there will be more opportunities in Europe as they're dealing with higher energy costs and their petrochemical industry dealing with higher raw material costs. One of the places where we think, honestly, we may see more additional demand for our ethylene facility will be some of the petrochemical companies in Europe wanting to come in and if you would, import a interim manufactured product as opposed to the raw material. And we also see it in South America and Latin America. All right. Well, thank you very much.